but we're going to find out this guy's paid a lot of people for influencers. Like
Oh yeah,
he bought various bloggers off.
yeah.
Um,
Well, I
I'm
mean, yeah,
happy. I never. There's no photograph of me with him. I'm
yeah,
very happy.
good. I don't want to see one. That's good because yeah, it was something around 70 million to the Democrats, but I'm on the same page as you. I'm really curious what he paid to media. I mean, Kevin O'Leary was on CNBC a couple of days ago talking about his $15 million check and then saying he'd kind of, he'd support the guy in the future. And it's like, what are you talking about? I think there's like a big sum. And I wonder if that's why he was getting this white glove treatment from the media across the board. I found it very curious.
It's very very weird, but we know that places like CNBC, they're giving lob balls to him.
If you were told that a $32 billion company can collapse in a matter of hours, you will most likely have a question: how? That's what everyone has been thinking about ever since FTX, the world's second largest crypto exchange, announced bankruptcy, with its founder and CEO stepping down from his position, following this huge controversy. Not everything is known as to what happened exactly, and it will require a huge investigation to get to the roots, but what we know now is that FTX has used around $10 billion of its assets to bail out its sister company, Alameda Research. With everything taking place, the crypto market, which was already in an awful state, managed to fall even lower. Because of this, many investors and traders are wondering as to what impact will this collapse have on the crypto trading industry. Sam Bankman-Fried was the darling of many U.S. politicians until his billion-dollar crypto empire collapsed on November 11. Following FTX's bankruptcy, SBF was arrested in the Bahamas and charged by U.S. authorities for crimes relating to money laundering and mismanagement of customers' funds for political donations. Specifically, the Southern District of New York alleged that SBF made donations to U.S. politicians in the name of other persons, which is a violation of U.S. campaign finance regulations. SBF, alongside top FTX executives, reportedly donated over $70 million to U.S. politicians during the 2021 to 2022 election cycle. SBF was named the fourth mega donor for the 2022 midterm elections, with a contribution of over $39 million. As a part of the restructuring process, FTX's new management led by John Ray III said it will set up a process to accept refunds from the politicians. The FTX saga took a dramatic turn on Wednesday evening, with the U.S. Department of Justice announcing that former FTX and Alameda senior executives Caroline Ellison and Gary Wang have pled guilty to fraud and are cooperating with authorities, while the plane carrying the former head of both firms was airborne en route from the Bahamas. U.S. Attorney Damian Williams posted a brief video announcement Wednesday night announcing the guilty pleas by Ellison, the former CEO of Alameda Research, and Wang, who co-founded FTX with Sam Bankman-Fried. Both Ms. Ellison and Mr. Wang have pled guilty to fraud charges, and they are both cooperating with the Southern District of New York, Williams said. The SEC wrote that Ellison manipulated the price of FTX's own FTT token multiple times since 2019, and that Bankman-Fried and Wang knowingly and improperly diverted FTX customer assets to Alameda. The SEC also alleges that Ellison and Wang were active participants in the scheme to deceive FTX's investors and engaged in conduct that was critical to its success, with Wang creating FTX's software code that allowed Alameda to divert FTX customer funds, and Ellison used misappropriated FTX customer funds for Alameda's trading activity. The SEC wrote that even as it became clear that Alameda and FTX could not make customers whole, Bankman-Fried, with the knowledge of Ellison and Wang, directed hundreds of millions of dollars more in FTX customer funds to Alameda. In an interview with The Jay Martin Show, CEO of U.S. Global Investors, Frank Holmes examines how SBF bought off politicians and the media to portray him in positive light and to probably make policies to favor him. Before we listen to Frank Holmes, please take a second to smash the like button and subscribe to the channel if you are yet to do so. Thanks for watching our videos.
Well, I think that it's very political, and we've seen like a lot of people didn't realize how much money he gave to both parties, but predominantly the Democrat Party. And his mother and father are professors, legal and law at Stanford, and they're very big in raising money for the Democrat Party. So if most of the Beltway agencies are Democrat, and he gave all this money, I think $5 million to the White House. He was the biggest funder going into this midterm elections. So people are going to give him that. I think that that's what's going to happen. And the person that turns on him was the guy that gave money to the Republicans. but they only gave it to Republicans that were pro the crypto space. So it's political. Both parties, I don't know how it's going to resolve itself. And you just hope there's going to be justice that will prevail. And that's all I hope, because he's a real psychopath. This is a psychopath, and I was told by my lawyers are telling me that it creates value for old guys like me. If there was nothing with white hair around him giving guidance about volatility, corporate governance, risk management, and he's above all that. And one of the things is that I had no interest in meeting him when I saw him on a picture and an interview on stage with Prime Minister Tony Blair and President Bill Clinton in shorts and flip-flops, like he's above them. He's above them. And to me, it was just disrespectful. I don't care he went to MIT and his parents were at Stanford. I just found it was just disrespectful to incredible leaders of the world. So other people jumped all over to he promised $15 million to one guy, $5 million to another to write all these good stories about him and promote. That's going to that's not ending. The influencers and who's an influencer, the regulatory world's going to go after that. But I think that the crypto space, it's very challenged, not only with characters like him and the high leverage of all these exchanges and shadow banks, I like to call them, like Celsius and Voyager, that's, we're a quasi bank when they're not, because there's no controls and capital controls. I think they'll all get washed out, and I think what will come out of it will be sort of positive and constructive, because blockchain's not going away, and digital decentralized assets are not going away. And so I remain positive long term. And Hive, Hive has been still the most efficient miner of all the crypto miners. I'm very proud of it. I'm surprised that some have market caps the same or bigger than us, and we make 9 times they did last quarter in EBITDA. Last year we did 10 million. Bitcoin was much higher, and Ethereum we did 10 million in revenue per employee. Goldman Sachs is $1 million. Royalty companies like Franco-Nevada, so we get 34 million in revenue per employee. They're the darlings for efficiency ratio. But I think that all these crypto miners, which started out of Vancouver, there's good structure, good discipline. All the CEOs of the miners are very mature. They're much more sophisticated than when Hive first went public. And so I think that industry, I think we need more professionalism in all these guys that hang their hats as being exchanges or shadow banks or whatever they're doing. There has to be greater credibility put in there. But we're going to find out this guy's paid a lot of people for influencers. Like he bought various bloggers off.
Well, I mean,
there's no photograph of me with him. I'm very happy.
Good. I don't want to see one. That's good, because it was something around 70 million to the Democrats, but I'm on the same page as you. I'm really curious what he paid to media. I mean, Kevin O'Leary was on CNBC a couple of days ago talking about his $15 million check, and then saying he'd kind of, he'd support the guy in the future. And it's like, what are you talking about? I think there's like a big sum. And I wonder if that's why he was getting this white glove treatment from the media across the board. I found it very curious.
It's very, very weird, but we know that places like CNBC, they're giving lob balls to him.
Yeah, absolutely.
Bloomberg's giving lob balls to him. And so that's the difficulty you see. But there's no doubt he's harmed this industry significantly.
FTX collapse was a devastating news for the crypto trading industry. This FTX collapse has shown us that being the second largest crypto exchange does not mean that it is absolutely safe to trade on this exchange and keep your funds there. With this, traders started to wonder what protects other exchanges from going through the same thing, especially in this dire situation, with exchanges such as Crypto.com already coming under fire. As reported by The Guardian, most of the traders who suffer from this FTX collapse were institutional traders who had huge investments in FTX. while small institutional traders have not seen big losses. But with the current FUD, there is a big possibility that these small traders might also suffer from the long-term consequences caused by this collapse. We should expect the tightening of regulations placed on crypto trading and cryptocurrencies in general. And while these institutional traders were already under some regulations, small retail traders who took the advantage of this lack of regulations might need to take a second look at this market if regulations get tighter and the advantages that this lack of regulation brought get removed in favor of long-term safety. What do you make of Frank Holmes' interview and the video in general? We are anxious to hear your opinion and how we can also improve our contents in the comment section below. Thanks for watching.